Good afternoon. Happy Friday. This is Sean Bell of the Decker Hewitt Group. The volatility that we've seen thus far in 2022 has obviously spilled into equity markets once again here this week. We are looking to close out the month of January next Monday, and as the current data would suggest, it's most likely going to be the weakest January on record for the markets. That's going back almost 100 years in terms of data. It has been an absolutely terrible start to the year as investors are obviously getting spooked about the Fed tightening cycle. So this week's Market Watch Weekly, as the last few editions have obviously been speaking to, just discusses that Fed tightening cycle. It isn't the first rate hike where markets are generally going to revert into some sort of a recessionary environment. It is the last rate hike, but historical data would suggest, and the most recent tightening cycles do suggest, that the market does obviously get a little bit uncomfortable leading up to that first rate hike. So there's 5 instances in this week's Market Watch Weekly where we do just discuss those prior tightening cycles. The average contraction is around 1.6%, but in all instances, the market has been higher 6 months after that first rate hike. So as we learned from this week's Federal Reserve meeting on Wednesday, the stimulus that has been in place since the beginning of COVID in March of 2020 will be ending in March of 2022. And more than likely, we are going to get our first U.S. Fed rate hike. It's probably going to go from 0 to around 25 basis points. So that's another thing to keep in mind here, is that we are still at a historically low interest rate environment. We are not ramping up to a choking point in terms of interest rates. So this week's Market Watch Weekly just references those numbers a little bit more. It's important to remember that interest rate hikes are born of economic expansions, not of a contractionary environment. The Fed will not be moving interest rates higher in an environment that is weak. It is obviously very much strong right now, hence why we're discussing potentially inflation concerns and interest rate hikes. So this is what this week's Market Watch Weekly just discusses. We encourage you guys to have a read. We'll end it there. Hope everyone enjoys the weekend, and we will talk to you again next week. Cheers.